The U.S. market's down Tuesday afternoon as investors rotate away from value stocks towards growth stocks, and we're seeing a spike in volatility. Well, let's find out how to make money during these slow summer months. We're joined by Nick Colas of DataTrek Research in New York City. Welcome back, Nick, and good afternoon to you.
Thank you so much.
Well, Nick, before we get back to that subject of how to make money, I want to ask you about Chinese stocks. You got Chinese regulators launching a crackdown against tech firms. DD Global shares are down more than 20% today. So is Full Truck Alliance, and Alibaba trading lower as well. We saw what happened with Ant Financial. Should investors stay away from these stocks, or should they pick up on these dips?
Yes, it's still time to stay away. This regulatory crackdown in China is not over yet. You know, tech grew fantastically in China last year and at far greater pace and across more companies than we saw in the US. 20, 30, 40 companies really just exploded in growth, and regulators are struggling with how to regulate their newfound power, those companies' newfound power. So we don't expect this to end anytime soon. And we've been cautioning our clients away from Chinese stocks in general and away from emerging market indices, because China is such an important part of those indices. So it's going to be a rough spot for the next 6 months, and then regulators will finally get their hands around it, and then I think it's safe to go back in, but no time soon.
I hadn't thought about that, right? Implications for emerging market stocks, since they do take a big chunk of it. Back to your theme that you recently wrote about. Why is it important to check the VIX, the volatility gains, to figure out how to trade this summer? What have you found historically?
It's super important because, July is actually not a bad month historically. It's usually pretty good, but volatility picks up pretty much across the board as we go through July and then gets really going in August. I mean, we can think back even over the last 5, 6, 7 years. August has been a choppy month. And the VIX seasonality patterns really highlight that. July can be okay. The VIX can kind of hover wherever it closed around June, but it picks up dramatically at the end of July, right around the upcoming Fed meeting, by the way, and then really hits its peak in the first week of August. So it's important to understand, particularly if you're investing and putting new money to work, when you do that over the next 2 months is super important to the returns over the next 6 months.
Why is that seasonality? What happens in August?
It's two things we think. The first is just liquidity dries up. You have less liquidity because people are on vacation, and liquidity will drive volatility. Oh, it has always been that way. And we tend to see the peak volatility in the first week of August that coincides with peak vacation season here in the Northeast. So we think a lot of it's liquidity, but we can't also discount the Jackson Hole meeting at the end of August. That's the other big peak in volatility. So it's probably somewhat vacation related, but also new news coming out of the Fed, which is especially important this year given all the chatter about tapering.
Well, given that, Nick, when's a good time for investors to ease up or sell from some of their positions and then buy back based on the swings in volatility?
The pattern is pretty clear across the seasonality playbook, and it's basically you lighten up into the rally in the first couple of weeks of July, week 2 and week 3, coinciding with earnings season this year, which should be fantastic. I mean, that's pretty much a lock. So we should see stocks hold in pretty well. But then if you're thinking about tactical positioning, lighten up into that and look to re-enter positions or establish new ones in the early part of August or the late part of August. And then the seasonality factors pick up again in October through the end of the year for a rally. We've had such a strong first half. A lot of our clients are thinking, okay, how do I maximize the second half? And that's our playbook.
All right. Well, thanks for sharing that playbook with us, Nick. Appreciate it.
Thank you.
Our thanks to Nick Colas of DataTrek Research. I'm Fred Katayama in New York. This is Reuters.